Thank you very much for the introduction.
Lovely. So I will step down and let Diana work her magic. We ideally end at 1, but you can actually go even further because we do have a buffer from 1 to 2. So knock yourselves out,
fantastic.
And let's bring VC closer to startups around the world. Thank you.
Thank you so much. And that's good to know because we already had kind of a pre-warm up before, and I think this conversation is gonna be extremely fluid, so we need all the time possible. Thanks for all the introductions. So I think we can just dive straight into the topic. First of all, it's a pleasure to have all of you here. I've moderated some panels recently, but this probably is the most diverse and international one that I'm running these days. As we already heard, so we have 4 amazing speakers today. Kelvin is joining us from Singapore, so it's a bit late for him. Thanks so much for making Kelvin. Marvin is joining us from Kiev. And one interesting fact, we spoke about this on the phone earlier. He is an investor with an impressive portfolio of investments. So I think it's 414 startups so far, Marvin. Yeah. And Hilla is joining us from the sunny Tel Aviv. She's also not only a director of Techstars, but she's an entrepreneur herself. She raised more than $40 million for her first venture and scaled it all the way to exit. Thanks for joining us, Hilla. And Matei is joining from Bucharest. He is one of the investment partners at Roca X. Also with an amazing experience in acceleration for over 20 years, formerly a co-founder of Founder Institute and manager of Commons Excel. And I'm joining you today from Warsaw, actually. So everyone, it's all around the world, super international and with an amazing background. So let's get started. And before we just jump into the conversation, for everyone that has just joined us, this is a conversation about the VC landscape, primarily with a bit of a zoom in Central Eastern Europe, how this landscape has been changing over time, what's up in this region, how are investors behaving in this market, and what are some of the alternatives to VC funding. So we'll be touching on accelerators and startup studios, and then maybe a glimpse into the future. So what startup trends we're seeing these days, what opportunities, and the road ahead. So it's both for aspiring investors, but also for startup founders that potentially are looking to fundraise. Before we get started, I have a question for all of you. I'm really curious because everyone is following different media channels, and even this event, right? It's all online. What kind of papers, newsletters, or media are you guys following these days to get your kind of dose of startup trends or investments? And I think this is quite interesting for any aspiring investors or angels that we have here watching this talk. Perhaps, Kelvin, do you wanna go first?
I think, thanks, Diana. Thanks to the organizers, esteemed panelists and audience. Just what comes to mind, it's TechCrunch, Deal Street Asia from Singapore, owned by the Nikkei Asia Review, and LinkedIn, which is actually a good channel. So yeah, that's my contribution.
Great. Who would like to add to that?
Hilla, please.
Yes, I just wanted to add that Techstars has, because we're the biggest seed investor in the world today, and we've invested in over 3,000 companies, we see a lot of trends and investment opportunities. So if you follow the social channels for Techstars and maybe The Line, which is our magazine, you can find a lot of opportunities and trends and interesting facts about investments.
Perfect. And I think, Matei, you want to go, or it was Marvin.
Yeah. So I follow a lot of stuff on Medium. I follow a bunch of newsletters, for example, on Substack. So like Lenny Revitsky, The Generalist. There's just tons of great newsletters right now that I subscribe to on Substack. And also, of course, the Strategery, which is pretty good, if you know that.
Yeah.
So yeah, those are the main ones. And TechCrunch, even though I think TechCrunch is a lagging indicator, it's not a leading indicator, but like it's, and I the one criticism I have of TechCrunch, I just start without bashing them, is just like, it's just overly celebrating venture capitalists and funding. when that's actually the beginning of the journey. So I think it's a lagging indicator. It's not a leading indicator.
It's a financially driven publication, I think. And maybe I can add also Marvin is writing a lot on LinkedIn. So maybe that could be another channel to follow. I really, really enjoy your posts.
Thank you.
Matei?
Yeah, and I agree with LinkedIn. It's a very strong channel if you know how to filter out your results and to choose your friends and the persons you're following. And obviously we are using TechCrunch, Crunchbase. And also, as we are pushing mostly on Romanian market, we are following everyday Romanian media, specialized media startups.
Exactly. I think most recently in the last few years, we start gaining more of a footfall in the kind of the European media, I guess, the startup stories in Romania. Very surprised nobody mentioned podcast because it feels like it's a more of a rising trend. Just to kind of wrap up this initial introduction, I'm actually, I would say, a fan of Scott Galloway and his Pivot podcast. Not that much focus on just investments, but more like technology trends, and it's got a bit political recently with the US election, but I think otherwise it's a pretty good channel to follow. So pandemic, everyone is talking about this crisis. And unfortunately, as much as I like to avoid it, I think we can't have it any other way. So I would like to start maybe with Matei or Kelvin, especially because you are part of a bigger funds and you are doing investments or you're active in investment. How has COVID impacted your investment strategy? Are you still focusing on your existing portfolio, or are you open for new deals? What's happening?
Do you want to start, Marvin,
Yes.
or should I? Okay. Mostly we at Roca X are focusing, we are having this strategy of supporting our portfolio, of being very close to them and helping them. Before the pandemics, we had monthly meetings, let's say, but now we have weekly calls, weekly Zoom meetings with almost every one of our portfolio. And they were struggling a lot at the beginnings of the pandemics with mitigating the risk, whether it was legal risk with their employees, with work from home, or even with negotiating space rental contracts. It was a real problem with that for many startups, bootstrapping or with a limited budget, as every startup is. On the other hand, we managed to close 8 deals this year, and we have 2 more in pending, and I think we will close them until the end of this year. So we focused on our own opportunities. And we found some opportunities in the crisis. I mean, not us as Roca X, but our startups found. For instance, Kinderpedia, if everybody, yes, I think in Romania knows about Kinderpedia, which is this education management platforms for schools and kindergartens. We increased dramatically this year. And that was just an opportunity provided by this crisis. And
I completely agree. And I think sorry, go ahead, Matei.
No, tell us what you think.
It's just that you mentioned something about investing. In the past, we've seen some of the greatest startups actually being successful these days. They were started during the crisis. So I think it's even more stronger reason to actually look for opportunities and business models that manage to pivot, especially for these difficult times.
Yeah, everybody's speaking of startups that were founded during the last crisis, but how judging this from above pragmatically, I think that there is no such a real impact into our world, because we somehow are bridging over this crisis. We tend to support companies that have a good long-term vision. So for some of them, it's even better to stay quiet in lockdown now in their garage, building their projects until the pandemic is over. And until the pandemic is over, they might be ready with their project. So it's a perfect timing, This is an opportunity for some of them. What
do you think, Kelvin? Because you are now in Singapore, but we talked about this earlier this week. You are more and more looking towards Central Eastern Europe, and now with the European license, I think it's a matter of time. Are you looking to actively invest in the region? Are you focusing on your current portfolio?
Right. I think I'll comment on COVID. I agree with Matei. You know, we see a need to help the portfolio companies a little bit more during this period. But I think COVID is also a good stress testing, you know, for startups, right? And it is an opportunity to sift out the gems from the semi-polished stones. Let's put it this way, right? If a few startups, as we have seen now in our portfolio, start to be super stressed, we actually are quite hands-on in trying to help them pivot. We're not being the venture builder blood that we have, you know, something close to Diana's heart. We're not against even trying to have portfolio founders come towards an M&A together, because it is what it is. If the crisis happens, you are severely impacted. You don't keep running the same kind of story or formula. For startups that have raised pre-COVID, cash conservation is key. So conservation of burn is very important while waiting for better times to come. On the bright side, COVID has brought down valuations to a more realistic level.
Exactly.
It's the elephant in the room that nobody wants to talk about. But everybody, my fellow co-panelists here all like to talk valuation and pricing, right? I think in Asia, you know, we are kind of pre-COVID, we were kind of overvalued across the board, attracting crazy multiples. I think valuations are more realistic from our perspective. I think with the abundance of talents now arising from the situation where all economies are being disrupted, you see now, you know, CFOs, CMOs, sales, marketing, you know, people that's willing to come out and be more open to becoming a founder at 45 years old, you know. I think that's also a good thing for startups in terms of challenging the status quo.
I completely agree. And also speaking for I guess for anyone that is watching and it's an angel investor as well, Marvin, you've got a great experience investing yourself as an investor also in this region. Among your fellow investors, what's your feeling? Are they more passive, more operational, or what's your actually strategy these days?
So, you know, as I mentioned, I used to be a VC. So up until end of last year, so I was a partner of 500 startups. And so most of this year, to be honest, was really about working with my companies. I have over 400 companies. So it's been a little bit of it's not a nightmare, it's not the right word, but just like, you know, just has been very, very busy working with them, sorting out a lot of the crisis. But I would say what I'm seeing, so I'm normally based in San Francisco. I've only been in Kiev for the last 2 or 3 weeks while I hide out from the aftermath of just the US disaster, right? But I'm normally based in San Francisco. My experience in San Francisco is very, very different. I think it was very, very quiet in March, April, and May, but like June, July, August, it got really stupid. I actually have not seen the pre-seed or seed stage be this busy from a deal flow perspective, and valuations are ridiculous right now. And so I would say fundraising, if you are an American startup, it's actually really good right now. I have seen the impact in the US be a lot less than I thought. I thought it was going to be a complete disaster zone. I thought, you know, it'd be over, right? Like 2001 or 2008. That's actually not what's happened. So what we're seeing that's happening is that valuations, like I'm not seeing anything lower with like, this is a startup with zero traction. And I'm seeing stuff in the, you know, in certain spaces, like in fintech or in areas like e-commerce, like it's like 8 to like 20 mil caps, which are ridiculous. But there's just so much money right now. There's lots of seed funds that raised quite a lot of money. So Q1 alone this year, it's something like $21 billion were raised, you know, sort of like were invested into VC funds. So what has happened is a lot of early stage VCs still have to invest. They have, you know, sitting on this money. And what has also been happening is a lot of the later stage VCs, you're not as comfortable writing a $20 million, sort of check on Zoom, but you're going to write a $1 million check or $2 million check. So you're seeing a lot of that. And so that's why I think that's one of the reasons there's a big flood, particularly in the earlier stage. So pre-seed stage is very active right now, at least up until the election. It's slowed down a bit since early November, but like prior, June, July, August, September, October, never seen it this busy.
Yeah, I completely echo that. And just from the UK perspective, I've seen a lot of kind of movements in the early stages of startups from an investment point of view, getting started this year. Now just shifting a bit more from a kind of startup founder lens, because Hilla, you are running an accelerator, and I think we'll be talking about alternatives to VCs a bit later in the conversation. What are kind of the biggest worries of the founders in your portfolio, and what advice are you giving to startups that you have in your cohort right now?
Yeah, well, first of all, I really want to agree with everything that Marvin said. It's completely, and this is what our statistics show, actually, not only in the US, but worldwide, the number of deals are going up, the money invested is going up. So I don't really want to talk about worries, because I think there are worries always, but when you're a founder, you have worries. You go to sleep and you're worried because you're trying to fulfill your dream and you're trying to educate the market sometime, and you need to look at your competitors. I did some very foolish things when I was a young founder, like not understanding what's going on. So my advice to my startups is to actually be very open to criticism and understand your market really, really well. For example, my first product was a grammar checker. It was the first natural language processing tool. And I didn't really want to hear anything about competition, including a very worthy competitor, which later became Grammarly, raised a lot of money, hundreds of millions of dollars. And what I say to startups today is I say to them, we have the privilege to be, everything's very transparent and everything is online. And we are lucky to have an event like this where people from all over the world can just watch us, and we're together sharing ideas. And because there are programs like Techstars, and by the way, I'm looking all the time for great companies for Techstars Tel Aviv and for other programs. We're lucky. Be open and be international and grab opportunities. So I want to I think that's my biggest advice.
Great. Thank you, Hilla. And just to wrap up on this one, because everyone talked about investments and the deals, or the number of deals going up. Interestingly enough, also in this region, some regard Central Eastern Europe, as a region that has become the fastest emerging region in Europe in terms of venture capital invested. Also, I'm sure most of you here on the panel would say, especially looking at Poland or Romania or some of the countries here, there's more money to be deployed and I think startups available. So it's growing well, and probably even twice as fast as Western Europe. Matei, maybe with a more kind of local insight, can you tell us, or how would you explain what kind of factors you think that contributed to this growth, or what could be potential factors coming up that would lead to even more growth in the upcoming years?
Yeah, sorry, I was muted. Are you speaking only about Romania or about all our region?
I think, correct me if I'm wrong, but I think everything we see happening in Romania to some extent, it's happening across Central Eastern Europe. It's quite, I guess, homogenous, if that makes sense. So please tell me your view, and maybe the others could add as well. I know, Marvin, you've been yourself involved quite a lot in this region, and you might have something to add.
Yeah, it's a fact that Romania has this huge potential due to its highly qualified human resources, especially in IT. And this is the sector that boomed over the past years. And from this sector, we are expecting the new biggest surprises yet.
Yeah.
And also the fact that, and I found out this speaking with various investors from US or from Australia, you name it, the fact that we are Europeans from a European Union is really important. It's really, really important. It's a fact, and it's because there are few legal barriers, and also a few cultural barriers to stand between our markets. So the risk of investing in Romania is lower. So that's why our whole ecosystem is prone to develop, if I may say so.
That's an interesting. Sorry, go on.
Go on.
I might just challenge you on that one, but not myself. It's just kind of giving the microphone to someone else. But what you said is interesting, Matei, that it's less risky to invest in Romania, because in spite of this growing economy, I think many foreign investors, so just want to emphasize that we're talking about investors that have not been active in the region, do regard Central Eastern Europe as more of a riskier region compared to other side of Europe. And maybe, I don't know, would love to be challenged on that one, but maybe Kelvin or even, Hilla, Marvin, through your lenses, as an outside investor, or perhaps from your conversations with your fellow investors, is this view justified, or what measures are you, or would they take to ameliorate the risk?
I think that view's changed. So I can tell you that I know lots, like Europe overall, there's a lot of interest from US investors, partly because of these like crazy valuations, but it's not, if it's just a valuation thing, that's a dumb reason to sort of invest because a company's lower valuation, right? I think the other thing is just there's a talent pool. So if you look at, for example, Poland or Czech Republic, or Romania, there's lots of really, really good emerging companies. So you've seen VC funds like, Kleiner has done a bunch of investments, in Central Eastern Europe as well too. And so, my take is that, and I've made quite a few investments. I've done a bunch of investments in Romania, 3 or 4. I've done like 2 or 3 in Poland. I've done like 5 or 6. Actually it's almost 10 in Russia right now. 3 of my best performing companies are actually Russian founders who happen to have most of their operations in the US, but all their engineering teams in Russia, for example. And I've done 2 Ukrainian investments. And so the region is rich with tech talent. And I think the commercial talent's actually growing very quickly. One of the fastest fintech companies is actually out of Croatia. You heard this, right? Like, just like there's lots of interesting companies coming out of the region overall. And so I do think that perspective and view is changing. Miro is another company. There's a Russian founder. He's a friend. Most of the team is in Russia, but like they're crushing it in the US. And so I think that view is changing. Not Pendo, there's Product. Kleiner did a deal in Prague. They just raised their B or C. Like there's actually a lot of deals are happening. And I think these are indicators that something's happening. UiPath, of course. And so that view has changed a lot, in particular in the last 2 or 3 years.
And I just want to build on that, on one point actually, Marvin, you said, because even though there's a lot of, and I completely agree, I think, and there's been a McKinsey study released recently on digital challengers, and they looked at Central Eastern Europe, and I guess there's no secret anymore that talent is regarded as probably the greatest advantage of the region. A lot of these founders, unfortunately, they reach, almost a ceiling when they start looking, elsewhere for funding or scaling, mostly US, as you said, or UK. Why is that, or what else can we change in this region? Because we already talked about a lot of European funds being here. Is it lack of, for example, sophisticated investors perhaps, or is it lack of the skills among founders to commercialize it? I think everyone is quite good at building software in the region. It gets a bit tricky when you talk about go-to-market strategy, selling, business development.
I mean, sales, like I said, I've been very vocal about this. Sales and marketing is an issue in general. I think that there's pretty good seed funds and there's pretty good Series A funds in Europe overall. There's not a lot of growth funds. So that's one of the reasons you're starting to see like a lot of European companies try to go overseas to raise their Bs and Cs, right? I think that's slowly being changed, but we're still a long ways away. There are a lot of Series A, there's a lot of seed and Series A funds for sure in Europe overall.
Yeah. Kelvin, would you like to add anything to that? Given your interest in the region?
Of how we, from this part of the world, Southeast Asia, we look at the CEE, right? So I'm one of the founding board members of the Central and Eastern European Chamber of Commerce, headquartered in Singapore. And when we started it, the opening party was like oversubscribed, right? I wish it was IPO, then we could have gotten a good valuation on the opening night, Just to say that I think there's a lot of talent, the ones that Marvin and Matei and Hilla alluded to. And these are the folks that are professionals and they've expatriated themselves to Hong Kong, mostly in finance, fintech, and we've come together to grow awareness. I think awareness is one of the key impediments as to why you don't get more growth capital investments into that part of the world. I just looked at the list of startups which I'm amazed that are founded from the region, like Bitdefender from Romania, UiPath from Poland. Obviously, everybody was on Witcher, right? CD Projekt is like amazing company. Gaming, Allegro, Czech Republic, there's Avast. So when I tell my fellow VC investors about these names, they are shocked, and they want to get on a plane immediately to Warsaw or to that region. So I think it's a matter of time. I think we are kind of ahead of our time. I mean, me and my fellow board members at the Central East European Chamber of Commerce. So what we want to play that infrastructural role. I think our hope is to have a fund, focus on CEE, but perhaps manage out of Singapore so that we can crowd in a little bit more of that interest from the region and spearhead into the CE. I think that's the next direction for 2021 that we're looking at.
Yeah. So you would like to invest in the best startups and then steal them away, Kelvin, to Singapore. I understand. I
wouldn't use the word steal. I would say, but by the way, we have an investment in a fintech in Malta where the co-founder is Romanian. So we have every intention once that business grows in Malta based on the European passport, to set up a clone in Singapore for the Asian market. So that's the play. I wouldn't use the word steal, actually.
Yeah, I guess probably borrow maybe might be a better one. But you're right. I mean, I think there's been, and I think we'll talk about venture studios in a bit. But if you think about Roca Internet, and it's regarded, it's a dispute there, but it's regarded as one of the most successful. This is how they've done it, right? And this is how they've built many successful startups. Just looking at really good, feasible, viable business models elsewhere, and tailor them to the market where they want to grow it. But we've also seen that venture capital funding is not a great fit for everyone or for every founder, depending, of course, on the stages and business and markets. And at the same time, I think we've seen an influx of accelerators, incubators, crowdfunding platforms, venture debts, and so on. And also, Matei mentioned the EU funding that indeed has been, it's been a huge support for the region overall. I'm curious, especially Hilla, because you're coming from, and Matei as well, but maybe you can start with Hilla, because you're coming from an acceleration background. What should a startup founder consider before joining an accelerator? And if they were to compare all these different options, how should they go about choosing kind of the right start for them?
So, first of all, I want to add to what Kelvin said so rightly. I think there's so much talent there. And I think in Central Eastern Europe, we have something very similar to what Israel has. It's a very small market, and you need to grow out of it really quickly and become very international and possibly find partners outside of it. And one of the reasons I joined Techstars, which is kind of like magic for startups, is because I realized when I was a young founder, all I wanted to do is like grab opportunities outside of my market. And I didn't really know how to do that. I used to go to conferences, find people, maybe a conference like yours, and I would reach out to them on LinkedIn. Sometimes they answered me, sometimes they didn't, I would stalk them. So when you're a young founder, all you want to do is get opportunities. You want to be in a program, or you want to be in a network that helps you, or you want to find an investor that has a big, broad vision, like a Singaporean one that's here, etc. So the idea is to decide where you want to go and find the right path for you, like you said. And that's really difficult because it's a recipe. It's, there's not one thing that can be done or not. You need to find what's great for your company. The worst thing is to just sit and build your business and wait for a really, really long time before you go out and get more and more feedback, international feedback. And I think what's happening sometimes, so a lot of Israeli companies, especially, we've invested in, I had my first company from Montenegro Uhura was in my program 2 years ago, and another company from Belarus, Casio. And, we found a lot of companies in Central Eastern Europe, which we've invested in, and took them into the network and created opportunities for them. So whatever you do, the worst thing is to just, coop up and not listen to anything else. You need to go out there, find more and more international partners, raise money outside of your market. And I think that's what Israeli companies are trying to do more now. That's why you get more and more unicorns in Israel, and you never used to see that, because big talent used to just come here and buy, companies. And now Israelis are saying we want to build big companies. And hopefully it will happen in Europe as well.
Yeah, I think if there's one key advantage with accelerators, and I could maybe say coming from the same background, it's the power of network, and it's the mentoring and the support that you get, which is absolutely crucial in the early stages. Matei, maybe you would like to build on that also with your experience in acceleration overall. Is in Romania, there's been many accelerators kind of popping up on the market recently. Are you in competition with them? Is Roca a nice continuation out of an accelerator? How is it?
Roca X is a very good partner for accelerators. I began a collaboration with Roca X before I joined actually Roca X as partner this year, and it was last year when I founded Commons Excel, which is people say the most promising acceleration program. It's really hands-on and it provides great results for the startups. And we had Roca at the beginning as a strong partner. It was near us. They guided us how to educate, how to grow, what to tell, and how to prepare those people in order to be able to get funding.
Yeah, exactly. I think it's maybe also Marvin knows more about this as well, coming from San Francisco. But if we're thinking about Y Combinator, Matei, exactly as you said, the philosophy, the strategy was exactly that, was providing a much more curated pipeline of startups that show that they are investable and it's an investable case to VCs, right? And then, of course, adding more mentoring, and it soon sort of expanding into what we call today an acceleration.
We are doing it for real. We are not doing acceleration for the sake of educating people. No, we are just focusing on solving, on bridging the gap between investors and startups, on teaching startups the language of investors and so on. That's why I've been doing since already in Vienna in 2013. I've been doing this, bridging the gap, and focusing on getting them ready to be investable.
Yeah. Speaking about teaching, and I know you talked about startups, but my kind of observation, I would say, for this region, I think we also have to think about kind of an angel investors revolution, if we want, or teaching on the other side as well. Marvin, as an angel investor and also previously part of the VC world, how much, are you focusing on investing in local ecosystems versus other startups, hubs? That's one of the questions for you. But most importantly, just thinking as an angel investor this time, what are sort of the bottlenecks preventing Central Eastern Europe from growing a bigger pool of so-called educated angel investors? My feeling is that we don't have enough, but I might be wrong.
No, I think you're probably right. So there's two questions there. I'm looking all over the world now, right? So I think sort of now that my head's outside of my pandemic hole, I can start looking around. And so I have started actively looking now. I'm looking everywhere, right? CE region is an area I'm actually very, very bullish on. I've had good success in the region. So I'm actually very bullish on this region overall. And even in my previous career, I'm a fan of the region. So I'm spending time out here. I'll be spending a lot more time out here over the next probably 2-3 years. That's going to be where I'm be making some bets. I do think unlike in San Francisco, there is a very, very sophisticated group of angels because almost everyone's in tech, right? And I also think that competition makes bad behavior gets punished very, very badly, right? So just like I think there's a level of education, and I'm not saying angels are bad in Central Eastern Europe, but I think a lot of them don't necessarily come from tech. And so there, I see a lot of screwed up cap tables. That is actually one of my biggest problems actually in the region. When I'm like, hey, this is a really interesting company. I'm talking to the founder, and I'm like, one of the questions I ask now is, hey, what's your cap table look like? And so I'll give you an example. When I was at 500, around the core accelerator program at 500, there was 1 year in 2015, one of my programs, I took in 3 European startup companies, and I never asked this question about cap table. And after this batch, I started to do that because all 3 of the cap tables are screwed up. I had to spend the whole batch fixing the cap table because of let's just say, lack of understanding and education, both either on the founder side, but also on the angel side. They literally have no idea. They're like, there's nothing here. I'm from the real estate industry. I'm from some industrial family or whatever. Like, you have nothing. So I want 50% of this company. There wasn't that understanding of just like, you've just basically made that company uninvestable. And so that's something that I do ask for. And I see a lot of screwed up cap tables still coming from Europe overall, but particularly from CE region. And so that is a huge problem in general for VCs.
Does anyone have a solution to that on the call? An investment readiness program, perhaps, for angels?
I was investor number 49, and I have 48 investors ahead of me. So you can imagine my shock. But I think the founders in that instance managed it quite well, where he rounded up all the 48 into a binding, irrevocable kind of rights sort of thing that he could speak on behalf of them. But still, like what Marvin says, can be quite screwed up, right? Because they're all over the place, and it's not structured, and if it's institutional funding, right? Like IFC or EBRD, they would run those names through every database that you can find, whether it's angel or seed. And if there's a hit or if there's a gray area, it's out. So why go through that pain, right?
And I also think as an owner, just a reason, let me explain why this is actually really important, because this is I'm investing usually pre-seed and seed. So we want to see that at this stage that whatever money's been raised, the cap table needs to be, it still needs to be majority owned by the founders, because as you go and raise money, if your cap table is screwed up with an investor at pre-seed or seed owns like 40 or 50 or 60% of the company, it's done. No institutional investor, very few institutional VCs will invest at that time, because you have to go fix the cap table. It's a lot of work. It is actually an immense amount of work. So it's just easier to say no. So this is something that you have to keep in mind as a founder, just like make sure your cap table is not screwed up. Because for VCs, we have tons of deals, right? Like you can see tons of deals. You're like, I don't need to go take the time to clean this up. It's way too much work and money.
And just on that point, and also I think was you, Marvin, but also everyone kind of agreed to that point earlier, is that we started to see more success stories coming out of this region. And I think with that one, there's also an upcoming trend where we see more serial entrepreneurs in the region going through all the stages of the startup growth and all the way to exit. And these founders essentially become investors themselves. And what that normally gives rise to, it could be fund themselves or investing as an investors, or something that I guess we touched on in the beginning is this new concept of startup studios. And there are many examples. I think one, just to kind of warm up the crowd in terms of where startup studios are, it's let's say Scott Dorsey that sold his company, I think was Exact Target, to Salesforce some years ago for 2.5 billion. Then he went on from there and started High Alpha, which is a venture studio based out of Indianapolis. Since then, they've built, I think, over 17 companies, and some of them are doing really, really well, went on to raise more cash externally. Kelvin, I know we discussed this before, but some of the VCs are thinking of these studios, as a new asset class on which to focus, but some perceive it as direct competition to their existing kind of investment strategy. What's your view on this? And maybe also Matei and the others, I'm super happy to hear your opinion on this as well.
I have a biased view, so full disclaimer, right? I'm passionate about this approach where you can create value through startup studios, and I don't see any competition between that that venture building activity and the VC activity, insofar as there's full disclaimers and your LPs are all aware. It is a reality that the ecosystem in Southeast Asia is perhaps maturing, and then the rise of founders, like Peter Thiel, and Elon Musk and everything was shaped, Silicon Valley version 5.6 or whatever. It's now starting to happen in this part of the world. And the founders here that have exited, they are super hands-on. If I were to launch a founders fund, everybody will come in. But what would they want? They will also want co-investment. They want to sit on the board. They want to build. They want to go in. They want to get rights. It's going to become more and more complex, I think, going forward. And venture studios are just part of the equation on how you grow the value. So I think maybe 5 years ago, a rocket internet model, would not have been able to raise from funds here who were very founder-centric, like Sequoia and some of the bigger founder-centric names. I think that's going to be changing because largely because of the surplus liquidity. I mean, just to give you guys a number, in Singapore, we have about $28 billion US under AUM across 100 funds. And when you're under pressure to deploy, you have to lower your expectation a little bit on always backing the founder and go for maybe the classic profitability play. If it's profitable, why not pay? So I think that perception is starting to change, especially among PE funds who are unable to deploy and unable to generate the IRR. They are more than happy to go in and back venture studios because it gives them the alpha.
Yeah, I think it's no secret, and I hope it's, nobody takes it personally, but unfortunately most of the funds do not return the fund, right? So it's about 85% of the funds do not return the fund, and maybe there's a very, very small minority of them, they do return, and they are really top notch, and startups they're not to touch. And I think with venture studios, the only reason I ask if it's perceived as a competition, and believe it or not, I do get that sometimes, is that it is regarded, and now there's more and more papers, there's more buzz around it. It is regarded as a better return model for any investors that would come on board as part of the venture studio. So it depends, I think, on, as you said, completely agree. It depends also on the VC and the profile. But so far, I think if there's that lack of knowledge, I think some investors might perceive it as direct competition.
No, it's at a different stage. Of course, they can have good results, the startup studios, but they're at a very early stage, and not every VC is looking for so early stage startups. So the VCs can come in at a later stage, and they see these startup studios as a part of the ecosystem, like a deal flow provider, a good pipeline.
Absolutely. And I think we can't,
but we in Romania, we don't have such startup studios.
Not yet. We don't have it, not yet. But I think that's the issue. You need an ecosystem, Matei, right? To be able to.
But we at Roca X, because we are a small organization, and we are looking for early stage startups, for even very early stage startups. Sometimes they do right before MVP. We are keen in finding value and harnessing this value in every project and build upon that. And we are planning to provide them not only financing but also resources and even office space to keep them close if anyone will need that in the near future. But we are planning to do such things.
So it's you are looking more and more towards this model. I think that's actually the efficiency of the model, right? It's not just the founders in this region. They don't need just financing backing. They need all the support, and we discussed it already on the call today. But it's more than that. It's about that go-to-market support. It's about recruitment. It's about technology and much more. I'm just a bit mindful of the time, and I know we already had 5 to 10 minutes stolen before, but I would just like to maybe direct the conversation towards sort of the final topic, I would say. And what I'm really curious to get from you guys, it's, maybe your predictions or what's going to happen in the startup world, investment world. So around trends, opportunities, and the road ahead. I think most startups, if so far we focus a lot on investments and on mostly investors listening to us, this is probably more for founders. Most startups these days are quite dependent on risk capital to fund their growth. And I know as much as I want to avoid Hilla talking about anxiety and troubles, they are quite anxious about what's going to happen and access to capital because of this pandemic. Some maybe just raising their next round. Some are probably raising their round right now. Maybe we can start with you, Hilla. Do you, from your perspective from Techstars, do you expect to see a surge in founders coming from geographies outside of Tel Aviv, or even outside of major cities? Actually, I would say to the main cities because of this remote work.
Yeah, I think, like I said, there's so many opportunities due to the pandemic. So I'm refusing to look at the half empty glass. I'm still looking at the half full glass. I think everything is becoming so much more virtual, so much more global. We have so many opportunities. I know for Tel Aviv, for the last class, there were many, many international companies, and hopefully anyone listening to this call will apply to our program. Applications are open until the 20th of December. And I'm hoping to bring as many to Tel Aviv, but also to other programs around the world, excellent Techstars programs. But as a general trend, I also feel that the resilient founders will prevail, which is pretty great because and valuations will be a little bit more sane maybe. And like we said in the beginning of the conversation, I think there's a lot of really good things happening with the pandemic for us.
Thank you. And just as you were just replying to us, I was pinged with some questions that I did not see before. So people were watching the chat and were watching the panel. So I'm just going to try to be a bit more flexible. And I had already a question in mind for you, Marvin, and I'm going to merge it with this question that came up in the chat, which is an invisible chat. I think guys, you don't see it. So the question is, what are the opportunities startup may be able to tap into this difficult times, Marvin? And I'm going to combine that with someone asking, what do you think is the most important criteria when assessing the potential of a startup? Is it the team, the product, the market, or something else?
That could be a whole panel of just like what's the most important thing, right?
Let's focus on the second question then. Let's focus on what the most important criteria for assessing the potential of a startup.
I mean, there's a bunch of things. I don't think there's just one thing. I think clearly the team's really important, but also I think the market, a lot of people beg on the idea, but I think the market and the idea and the problem is kind of tied very closely together. And why the team is really important. It's not about are they qualified? Did they go to Harvard Business School? That tends to disqualify you, in my opinion. It's more are these people working on their life's mission, right? Why are they more mission oriented? Are they going to stick out this startup and work on this for the next 9 to 10 years versus I'm going to do this for 2 years because I think I'm going to make a lot of money. Those people are idiots, right? Startups are the worst way to make money in general. And so it's a combination of, do they have a balanced team? Is it the right team? Are they working on life's mission, right problem? There's a timing question of just you can talk about trends all you want, but some stuff just takes longer than normal. So, it's the right team to go after it. And there's a big question, which I think a lot of European companies, and I'm going to say a lot of Canadian companies as a Canadian, just don't get right. Of just you can have an awesome product, but what is your distribution strategy? Have you been thoughtful about your distribution strategy? So these are some things that I think are really important to understand. And you want to go big, right? And there's nothing wrong with not going big. Go build a $5 million a year business. That's amazing, right? Don't go raise money, keep the cash. It's awesome. But if you're going to take money from a VC, I'm looking for 50 to 100x of my money. So you're going to go big, right? And so just understanding these kind of things, if there is a match in regards to their goals and our goals. And so that's kind of what I look for.
Yeah. And some of the investors, and I'm a bit skeptical on that, or I'm not exactly sure what would be the right answer, but they would even ask you to have an exit strategy. What's your exit strategy?
Yeah, I don't like that at all.
I don't like it either.
I think it's awful. And I think that comes from private equity, ex-banker type people of just, if you're thinking about your exit strategy, you're not looking to build something big, frankly speaking.
Yeah. And just one question, which I think might be, to be honest, I think is relevant for, of course, for everyone, because you've invested in many, many startups. And I'm going to try to rephrase the question because it's a slightly long one. But I think what our viewer is trying to ask, is essentially a good, or is it an optimal age to start a company? And I know this is it's a very difficult one. He's trying to kind of go towards a slightly younger age because you have less commitments, but maybe thinking about your own portfolio, if there was an average.
There isn't. I have a bunch of founders who are very, very successful who are like 18, 19. I have a lot of founders who are like 35, 45. There's been research recently, Lee, that a lot of the many successful founders tend to be over like 35 or something. So there's this myth of the young founder is fundamentally not true. And I also think it depends on the type of company you're trying to build. You know, younger founders tend to go after consumer focused, like business to consumer. Older founders tend to be doing more B2B, and I'm generalizing, but it makes sense, right? Like if you're straight out of university, how are you going to go build a B2B company? You've never worked in a company before, so you don't know anything, right? And vice versa. I think it's weird if you're like a 45-year-old guy working on a consumer app, I don't know. I think that's strange. You don't know anything. Like I barely even know how to use Snapchat, let alone TikTok. So it's just like, I think it's just very strange. There's not a match. Not to say I wouldn't fund that, but just,
Agree. And I think, is Matei laughing, I think, or someone was laughing. You want to add to that?
Yeah, I tend to prefer the 35-year-old category as the youngest ones, although they get very much attention from the press. They, most of them are having problems with focusing on one business. They have multiple threads, multiple opportunities, and they can just get out of the business overnight. On the other hand, the old ones, the guys over 50, let's say, they're not bad. They're very experienced, but some of them are very stubborn and are having trouble pivoting.
Matei, I have.
It's not like I'm putting a frame and everybody is like this. But what I'm trying to say is, if you are 80, try to be focused. If you are over 50, try to be flexible, and that's it.
I just want to add to that let's not put ourselves in templates, because that's one of the reasons that female founders are underrepresented, because there were so many templates. And because research has shown that investors invest in people that are like them, that they could see themselves having a beer with them after work or whatever. And because there's not enough female investors, hence even this forum, there's not enough female investors. There's not enough female founders. That's a whole different panel that we should discuss. But I'm saying let's
completely agree.
Templates. Let's not do gender templates, colored templates, anything.
Completely agree. Kelvin, I know you're laughing at Matei as well. It's as we're talking about people's age.
I know we're not going to go to templates, right? But I wanted to just say I have a female founder, Babushka, in my portfolio. We use the Russian word, right? But I would say that actually the other quality, age aside, is focus on revenues. I don't see a lot of founders out there focus on revenue. I mean, they can articulate that HBS. By the way, I did HBS myself, but it's kind of BS in a way. After a while, when you put through a deck of market, go to market, blah blah blah, right? But they don't really know how to do it. Especially if you come from B school, you have a nice deck from INSEAD or whatever, but you don't really know how to make money. And I think that is a key problem I find in founders today. The CRO today is more important than the COO, more important than the CEO. And that I find extremely lacking today. Yeah.
I think that's a great statement to end the panel on, actually, Kelvin. I can only thank you for everyone for taking the time to be here. Just as a wrap up and just for everyone to have some information fresh in mind, Hilla is now looking for best startups for joining Techstars Tel Aviv. So the applications is now open for anyone in Central Eastern Europe that it's also looking for funding and for expert advice. Kelvin and Marvin and Matei are here. But most importantly, if you want to scale and go to Singapore and leave this amazing region, Kelvin might be your man, but hopefully we can steal you from Singapore to Central Eastern Europe. And it was a pleasure to moderate this panel. I hope everyone had fun and enjoyed it. And for everyone listening, I will see you tomorrow.
Yeah, you're not leaving, you're not off the hook yet. So
I'm not. Okay, sorry.
Neither
sorry.
of you.
Okay.
No.
We can hang in here a bit more.
Yeah,
it's a good opportunity to say this was a great this was a great panel and you moderated it really well. Thank you for the opportunity.
Yes, thank you so much.
So
thank you. Marvin put a bit of pressure on me before, but that's not.
there's a comment in the chat that Diana has not read, but I will read it. This is the best moderated session I have attended in this summit. So
okay.
I didn't say it. I don't know if
Flying
I want
colors.
to say it because
Yay.
I'm also moderating a lot of panels, but it was really very well prepared. If you enjoyed Diana's guests and style, don't forget you can also see her tomorrow at 1 Romanian time, so 12 CET, on the future of corporate venturing and R&D commercialization with Lars Rossel from BSH. And Ercin Exin, former Rocket Internet. You might know him as well. Now, I'll have two questions, sort of. I think mixing this panel with yesterday's panel on social impact investment in CE might prove a very courageous and a smart thing to do in the next months. So I take this opportunity to publicly invite you and use Diana's networking and moderating skills, but also her interest and experience in the field to do that. That's one comment / invitation and question. And then the other one is a more it's a broader question to all of you with a short answer, ideally. Are you moderately optimistic about 2021 from a business perspective? Are you cautiously optimistic or are you non-optimistic at all? So at a global level, from a business perspective, everyone's talking about a huge economic crisis. Nobody's looking at it or seeing it. How are you about 2021? Marvin?
I'm super bullish. I'm super excited about 2021, 2022. I don't think we're out of the pandemic yet, but I'll just give you some numbers. I was very, very surprised by this. So, 2020 new business registrations, 40% over 2019. So yes, a lot of people lost their jobs, but there's been a lot of business closures and layoffs, but there have been a lot of new businesses being started, not just tech startups, but offline businesses. And that gives me, that's always a good thing in my opinion. And so overall, I'm super, super bullish. Lots of opportunities. There's lots of VC funding out there. There's lots of great startup founders. There's been a lot of people leaving top tier companies like Facebook, Google, Airbnb, Uber, and they're all starting companies. And so in climate tech, in biotech, in AI, whatever you go down the list, it's really, really exciting right now. And so it's an amazing time to be around.
Who else? Matei, how are you? Optimistic or less optimistic?
I'm cautious by nature. And I've always been cautious, but I'm optimistic for 2021.
Good.
But cautious still.
We're cautiously optimistic. That's the way Romanians are. Also pessimistic in the same time. And realistic, of course.
Conservative by nature.
Yeah. What about the others?
I'm optimistic. Just full point optimistic. I think great things are ahead for us. I mean, we might take little dips here and there, but in general, I think we're handling this, especially in the high-tech sector, and I think we'll be fine.
Cool.
I'm super optimistic.
Super optimistic. Okay.
obviously then I'm not Romanian, I suppose. Then you know.
No, 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 not really. Even if Babushka is around.
Right. But I believe that the COVID pandemic jobs loss also presents great opportunities. All the digital startups that's going to be growing and disrupting. I think we are very, very resilient, much more resilient as we think we were not. We'll bounce back much faster, and I think in the VC sector especially, I think that's where everybody will throw their energy for the future. That's why I'm super optimistic.
Cool.
I may sound crazily optimistic because I just a side note. So I left kind of my role in a really good opportunity in London, and I know 2021 it looks it looks great, but at the same time there's so much uncertainty, right? So when I say crazily ambitious, is that we are now trying to fundraise for quite a good sum of money for what could be the first venture studio in Romania in the region, and also what Marvin said about people and unemployment. We're at the same time trying to get off the ground a virtual accelerator for departing talent and trying to help these people build their own startup. So just on that note, I'm quite looking more into 2021 than what happened this year.
I'm more with Matei on this, even more than he is cautious. But without optimism, it's really hard to move forward.